The Social Security Administration has your birth year on file, and based on that single number, they have already determined your full retirement age, your maximum possible benefit, and the exact penalties that apply if you claim at the wrong time. What they have not done, and will never do, is sit you down and walk you through what those numbers actually mean for your specific situation. Right now, in 2026, there are people in every birth year group who are either collecting hundreds of dollars less than they're legally entitled to, or are about to make a claiming decision they cannot undo, not next year, not ever, simply because no one explained the rules that apply specifically to them. Today that changes. Find your group. Listen to what applies to you. And by the end of this video, you will know exactly what to check, what to fix, and what to never do. I'm going to break this down into 4 birth year groups. Each one has its own rules, its own risks, and its own action steps for 2026. Find the group that matches your birth year and pay close attention, because the last group contains something almost nobody in that range has been told, and for millions of people it could be worth more than $100,000 over their retirement lifetime. Before we get into the groups, if you are not subscribed to this channel, stop and do that right now. Turn on the bell notification too. Here is why this is not a generic request. Social Security rules are not static. The earnings test limit changes. IRMAA threshold shift. Survivor benefit rules get updated. Overpayment collection policies, which affect hundreds of thousands of people right now, can change with almost no public announcement. When those changes happen, the Social Security Administration does not send you a letter explaining what it means for your check. They update the policy. They expect you to already know. What I do on this channel is take every one of those changes, translate them into plain language, and get that information to you before the deadline passes, before the wrong decision gets made, before the money is already gone. The people who are subscribed here find out about these things in time to act. The people who are not subscribed tend to find out after getch, after the reduced check, after the missed window, after the permanent consequence is already locked in. Hit subscribe. Turn on the bell. Now let's get into your group. You are between 72 and 83 years old. Most people in this group have been on Social Security for years, and most of them have made peace with their monthly check. They know the amount, they've budgeted around it, and they assume there is nothing left to look at. That assumption is costing some of you real money every single month. The survivor benefit. Most widows and widowers are missing. If you lost a spouse and you are currently collecting your own Social Security retirement benefit, there is a question you may have never been asked. Are you on the right record? A widow or widower is entitled to collect up to 100% of what their deceased spouse was receiving at the time of death. In many cases, especially when one spouse had significantly higher lifetime earnings, the survivor benefit is substantially larger than the benefit the surviving spouse receives on their own work record. Here is what almost nobody in this group knows. The SSA will not automatically move you to the higher benefit. You have to ask. You have to specifically request that they pull both figures, compare them, and switch you to the higher one if that is what you qualify for. On a $1,500 monthly difference between your own benefit and your late spouse's, the gap over 10 years is $180,000. If you lost a spouse and have never specifically had this conversation with SSA, call them directly at 1-800-772-1213 and ask them to compare both benefit amounts on your record. Do not assume it was handled automatically. It frequently was not. The Medicare overcharge that is being deducted from your check right now. The second issue for people in this group involves Medicare Part B, specifically a surcharge called IRMAA, the Income-Related Monthly Adjustment Amount. If your income was above a certain threshold in a prior year, Medicare charges you extra. That surcharge ranges from an additional $70 to nearly $500 per month on top of your standard Part B premium, deducted directly and automatically from your Social Security check. Here is what makes this particularly unfair for retirees. Medicare uses your tax return from 2 years ago, so if you sold a property, did a Roth IRA conversion, or had any one-time income event that temporarily spiked your earnings, you may be paying a massive surcharge right now based on money you no longer have and no longer earn. The appeal form is the SSA 44. It exists specifically for people whose income has dropped due to a life-changing event, retirement, loss of a spouse, reduction in work hours, or a one-time financial transaction that will not repeat. You file it, you show what your income actually looks like now, and the surcharge gets reduced or eliminated. If your Medicare Part B premium is higher than $185 a month right now, find out why. Download Form SSA-44 at ssa.gov or pick it up at any Social Security office. You are between 67 and 71 years old. This is the most consequential group in 2026. Not because the rules are the most complicated, but because the people in this range are either in the middle of making their claiming decision or they made it recently. And in this group, every single birth year has a different full retirement age. Most people do not know their specific number, and that number determines everything. Here is the complete breakdown. Born in 1955, full retirement age is 66 years and 2 months. Born in 1956, full retirement age is 66 years and 4 months. Born in 1957, full retirement age is 66 years and 6 months. Born in 1958, full retirement age is 66 years and 8 months. Born in 1959, full retirement age is 66 years and 10 months. That is your number, not 66, not 67, your specific month and year. Write it down. What happens when you claim before that date, permanently? If you claimed at 62 and your full retirement age is 66 and 6 months, meaning you were born in 1957, your monthly benefit was reduced by approximately 25.8%. That reduction does not go away when you reach full retirement age. It does not phase out over time. It stays at that reduced level for the rest of your life. On a benefit of $2,000 a month, that is $516 less, every single month, permanently. Over a 20-year retirement, that is $123,840. The SSA did not warn you about this before you claimed. They asked if you understood your benefit would be reduced. You said yes. The reduced amount became your permanent number. What happens when you delay past your full retirement age? For people in this group who have already reached their full retirement age and have not yet filed, every month you continue to wait earns you 2/3 of 1% more permanently. That compounds to approximately 8% per year. Between your full retirement age and age 70, you can accumulate 24% to 32% more per month for life, depending on your exact birth year. On a $2,000 benefit, that is up to $640 more every single month, forever. That is not a temporary bonus. That is your new baseline for every check for the rest of your life. The earnings test, nobody explains before it happens. If you are currently collecting Social Security before your full retirement age and you are still working, the earnings test applies. In 2026, if you earn more than $23,400 in the year, SSA withholds $1 for every $2 you earn over that limit, directly from your benefit. The money is not gone permanently. It gets credited back to your record once you reach full retirement age through a recalculated benefit. But if you do not know this rule, your check can appear to shrink or stop with no clear explanation. Now you know the explanation. You are between 61 and 66 years old. For everyone in this group, the rule is the same. Full retirement age is 67. No months, no exceptions. Exactly 67. And the claiming decision you are approaching is one of the most financially significant choices you will make in retirement. The 30% permanent reduction in real dollar terms. Claiming at 62 with a full retirement age of 67 reduces your monthly benefit by 30%. Permanently. On a $2,000 monthly benefit, that is $600 less every single month for the rest of your life. Over a 20-year retirement, that is $144,000 in cumulative losses compared to simply waiting until 67. The SSA will process that early application without a financial warning. They will ask if you understand your benefit will be reduced. You will say yes, and that reduced number becomes your permanent baseline. That does not mean early claiming is always wrong. For some people in this group, the math works in their favor. What it means is that you should make that decision with the full picture in front of you, not after the fact. The retroactive lump sum option. Almost nobody asks about. Here is something most people in this group have never been told. If you apply for Social Security after reaching your full retirement age of 67, you can request up to 6 months of retroactive payments. The SSA pays you as if you had applied up to 6 months earlier as a lump sum with your first check. On a $2,000 monthly benefit, that is up to $12,000 delivered with your first payment. The trade-off is a slightly lower ongoing monthly benefit because your effective start date moves back. Whether that trade-off makes sense depends on your specific situation. But the option exists. It is legal, and almost nobody asks for it because almost nobody knows it is available. Your earnings record. Fix it now while it is still free. For everyone in this group who is 5 or more years away from claiming, the single most important thing you can do right now has nothing to do with timing or strategy. It is this: verify that your earnings record is accurate. Go to ssa.gov and open your Social Security statement. Look at every year of recorded earnings. Compare them against your own records: old tax returns, W-2s, pay stubs. One incorrect year, an employer who submitted the wrong payroll figure, a period of self-employment that never got recorded, a job from a company that has since closed, reduces your monthly benefit by approximately $100. If you have 3 incorrect years, that is $300 less per month permanently for every check you ever receive. Finding and correcting an error now is straightforward. Finding and correcting one after you have already claimed is significantly more difficult and in some cases impossible. Do it now while the documentation is still findable and the fix is still free. You are 60 or younger. You are not close to claiming Social Security. And that is precisely why what follows matters more than anything else in this video for people in your group. Because the window to fix certain things without it permanently costing you money is still open. And it will not stay open forever. Your numbers, set them in your mind now. Full retirement age, 67. Claiming at 62, a permanent 30% reduction. Waiting until 70, up to 24% more than your full benefit, permanently. Those numbers are fixed. They are not going to change for your generation. What is not fixed yet, what is still correctable, is whether your earnings record accurately reflects every year you have worked. The earnings record problem that gets harder to fix every year. The Social Security Administration has been recording your payroll contributions since your very first job. That data came from your employers. And every single year, there was an opportunity for something to go wrong. A number submitted incorrectly, a year that got skipped entirely, a period of self-employment that never made it into the system. Each uncorrected error reduces your eventual monthly benefit by approximately $100. If you worked through the 1980s and 1990s, the era of manual payroll processing, before digital records became standard, there is a meaningful chance that at least 1 year on your record does not accurately reflect what you actually earned. Here is what makes this urgent. Even though retirement feels distant, fixing an earnings error requires documentation. 2 forms: pay stubs, old tax returns. Those documents are findable today. In 15 years, after a move, a divorce, a family death, or simply the natural loss of paper records over time, they may not be. Go to ssa.gov right now. Create a My Social Security account if you do not have one. Open your earnings statement. Go year by year. If something does not match, file a request for correction of earnings record with whatever documentation you can locate. The SSA processes these, your record gets updated, and your eventual monthly benefit goes up accordingly. Do it now! The fix is free, the documentation is still findable, and every year you wait is a year closer to the point where it is neither. Here is where every group stands and what to do right now. Born between 1943 and 1954, if you lost a spouse and are not sure whether you are collecting on the right record, call SSA at 1-800-7721-213 and ask them to compare both benefit amounts today. If your Medicare Part B premium exceeds $185 a month, download Form SSA-44 and appeal. Born between 1955 and 1959, look up your exact full retirement age down to the month. Understand that claiming early means a permanent reduction, not a temporary one, and calculate what that means in real dollars over your expected retirement lifetime. Born between 1960 and 1965, before you make any claiming decision, get the full picture, including what a 30% permanent reduction costs you over 20 years, and whether the retroactive lump sum option applies to your situation. Then open your earnings record at ssa.gov and verify every single year. Born in 1966 or later, open your Social Security statement at ssa.gov today. Go year by year. Find the errors while the documentation is still findable and the correction is still free. None of this is complicated. All of it requires one step. And that one step is the only thing standing between you and the money. Share this video with someone you know who is in one of these groups. A parent, a sibling, a neighbor, a spouse who has not watched it yet. One conversation about the right benefit record or the right claiming age can change someone's financial situation for the rest of their life. Subscribe if you have not already. The rules around Social Security change every year. The people who know about those changes in advance protect their money. The people who find out after cannot always undo the damage. You now know which group you are in. You know what to check. Go do it.